Hi, I'm Christina Trauthwein, VP of Content and Creative for Hotel Business and Inspired Design. Welcome to our virtual panel series, Hot Topics. Today's session is Lessons Learned, Strategies for a Resilient Portfolio. As the lodging industry gears up for a recovery, the events of last year will undoubtedly play a role in how investments are made. Labor challenges, flexibility during all stages of the business cycle, and the need for a simple operating model will all be major factors to evaluate when considering a hotel brand and segment. Throughout the pandemic, one bright spot in the hotel industry has been the extended stay segment. With a focus on the essentials to optimize efficiency and value, extended stay is projected to continue its strong performance. And today we're going to explore the benefits of the extended stay segment and other important strategies in building a strong, profitable hotel portfolio. I'm joined by a panel of experts who will shed some light on the topic. And they are Jerry Bellows, COO of EXCL Management Solutions, Chip Johnson, CEO and founder of Turnstone Group, Philip Powers, partner at Paladin Equity Capital, Ron Burgett, SVP, Extended Stay Development, Choice Hotels, and Mark Skinner, partner at the Highland Group. I just want to take a minute to go over the format. The session is an hour long. I'll be moderating with questions for the groups of panelists, but I encourage a lively discussion amongst them. And I will leave some time at the end and possibly halfway through to take some questions from the audience. So if you have a question for the panel, please type it into the Q&A box, not the chat, and I will try to get to as many as possible. We're going to be covering this Hot Topics session in the November issue of Hotel Business, on hotelbusiness.com, as well as via social media on LinkedIn, Facebook, and Twitter. The session is being recorded and will also be available on demand online. Also, before we start, I'd like to take a moment to thank our partner for today's panel discussion, Choice Hotels. We're honored to collaborate with the company to provide you this pertinent and timely information. So, with that all said, welcome to all of you, and let's begin. So, let's start out a little broader. Why is it so important to diversify your portfolio, especially at this time in the hotel industry? Does anybody want to start?
I can start with that, guys, if you'd like. One of the things at Choice Hotels, we are diversified, right? We have properties in upscale with our Cambria brand, and we're in economy with Econo Lodge and Roadway. Extended stay is absolutely something that every hotelier should have in their portfolio, and it's fairly new, to be quite honest. I've mentioned a few times to folks that we've kind of flown under the radar with the extended stay segment as an industry. And what Choice did about 4 years ago now, and a little bit before when we purchased Suburban, but we really invested heavily in extended stay to make sure that Choice had a solid footing. So what it is, it's resilient, right? The ups and downs of the economy have not affected the performance at all of extended stay across the segment. And we kind of knew it already, but now it's proven to a lot of new folks. So it just is a good shield against ups and downs such as COVID.
Well, you're talking about ups and downs. I mean, certainly a down. 2020 was a tough year. So that being said, how did extended stay hotels perform in 2020?
I can take that one if I may. The short answer is very, very well under very difficult circumstances. If you want to put some numbers to it, let's look at it two ways. Let's look at the loss and then the gain. On the loss side, extended stay hotels collectively saw RevPAR decline by 1/3. Now, that in itself seems horrible, except when you think that all hotels declined by 48%. And if you look at each and every extended stay segment, it fared better than the corresponding traditional hotel segment of the same class. So, for example, economy extended stay hotels lost 5% in RevPAR for 2020. Economy hotels in general lost more than 5 times that amount. They lost 28%. Mid-price extended stay lost 26%. Mid-price hotels in general, 34%. The hotel data is from STR. Upscale extended stay hotels lost 42%. Upscale hotels lost 51% in 2020. And to look at the gain side of things, which is very interesting. If you go as far back as 2010, extended stay hotels had 9% of all hotel demand in the US. It was increasing anyway, partly because supply is growing much faster than the overall hotel industry. So by 2019, that share of demand had grown to 10.5% from 9%, and the share of revenues had gone to 8%. In 2020, by the year end, that demand share had gone from 10.5% to 14%, and the revenue share had gone from 8 to 11.5%. So market share, extended stay hotels gained an enormous amount. The largest gainer in percentage terms was the economy segment of extended stay, partly because they lost the least, but also supply was growing. Extended stay supply didn't decline in 2020 like overall hotel supply did because of the closures and then some reopenings. For the whole year, extended stay hotels actually increased supply.
Okay.
So, very good.
And that's a lot of numbers, but yeah, I mean, it shows in general it's been strong.
Yeah,
they were
maybe you can help
all in the right direction for extended stay, whichever way you cut it.
Sure.
And Mark, I don't know if you have any data going back to the last recession, which is really why we got into extended stay to begin with and started looking at it more after it was introduced to us, is the perception that it performed better than other hospitality types during the GFC, the economy section of extended stay.
It did. And the gap was nowhere near as wide as it is this time, though. But
Correct.
It's a little bit complicated, especially in the economy end of extended stay, to do comparisons with the last downturn, because there was a couple of big factors involved in the numbers. One was Hurricane Katrina, because it had such a big influence on the economy segment that it affected it nationwide for an entire year. It boosted it because of a number of factors. Construction was peaking at the time. You had a suspension of government per diems in order to put the displaced in hotels. So it was benefiting tremendously from the adversity around Hurricane Katrina. Also, more than 40% of all economy extended stay rooms are located in the two regions that got hit the hardest by the person's displacement. So what was happening was it was artificially lifting economy extended stay to an unprecedented peak as we were actually entering a recession. So then the recession was somewhat construction-led. So it dropped precipitously, and then it was compounded by the ESA bankruptcy, because they are so large. When their numbers started to go down, nothing to do with the fundamentals of supply and demand, this was a national issue, it pulled the numbers down. So the answer to you is, yes, they did perform better than the overall industry, but without those factors in there that distorted it, the gap would have been even higher.
Okay, thank you.
Yeah, but I think
it would have been as high as this time, though.
And Chip's very aware of what we're doing. I mean, as a good franchise partner of ours now, I mean, we actually gained over 19, though. We were a 5% increase over where we were in 19, not 20. We're kind of leaving 20 on the shelf, which is pretty good in itself. So when you're seeing increases right now above where we did just 2 years ago, which in itself was nearly a record year, we don't see any weakening right now going into these quarters either. This is going to be a strong year-over-year performance for Choice in all brands, all segments at 5%, but especially for the extended stay segment. I mean, we're hitting record.
I would concur. Economy extended stay for the year to date on average is running 109% of the RevPAR it was running in 2019. On average for the year to date, as far as I know, that is the only segment of the hotel industry to be beating 2019 for the entire 6 or 7 months. Only 1 month did it drop below, and there's mitigating factors on that too. Now, some other segments with the boosting of summer travel have certainly gone that way in in July, and June and July, but economy extended stay has done it since the beginning of the year. And the other two segments are mid-price is about neck and neck with mid-price extended stay hotels, but upscale extended stay hotels are at 83% year to date. If you compare that to upscale hotels in general, they're at 67.
Yeah.
Very good recovery all around.
Yeah, I would say I would agree with that. We underwrite the projects that we have underway and in the pipeline. We've been using 2019 numbers, and clearly we're ahead of that now in terms of both ADR and RevPAR. So, and our manager reports 80 to 90% of his overall hotels are having the best ADRs ever.
Right.
Right. And Philip, can you share a little bit, if it's okay with you, Christina, can you share a little bit about what your build out plan is and what you're working on now? Just
Sure.
You're on the West Coast, you're in LA area.
Yeah, we got embarked on the Everhome Suites brand with Choice a couple of years back, and we have the master development agreement for LA and Riverside and San Bernardino counties. We have 3 projects underway, one in Corona, Temecula, and Ontario. And our plan is to build a total of 10 over the course of the next few years. We are actively looking for sites, freeway adjacent, on off-ramp adjacent, anywhere in that tri-county area.
And I don't think you mentioned it, but I think it's important so that we know for impact reasons and what other brands are doing, but you're looking at exclusively Everhome. Everhome's our new brand that you're actually building.
Correct. And so the Corona project, we're getting ready to pour the pad in the next couple weeks. That'll deliver in May. It will be the first Everhome.
So I know you're talking about California right now. What other markets are hot right now in terms of extended stay? Where do we see the strong performance in the next year or two?
Yeah, let me just answer from our franchise perspective. And then these guys obviously have a lot of projects underway and they're looking at a lot of areas. So, I've always said, and I still continue to say in this environment, is the 4 corners of the U.S. have been strong for us. Anything in New England, South Florida, Georgia, that area. And then, of course, Southern California has been very, very well received by our extended stay segment, especially. And then the Northwest, Seattle area, Washington State. We have a master developer up there that's built several and just, continuing to look at sites and growing aggressively. But in addition to that, we do have the middle of the country that we're working heavily in, and that's in areas of Dallas, Chicago. Chicago is one of our largest developers. So we're seeing major markets, and that's really where we've seen the highest profitability and return on investment are the top 50, if you will, MSAs. And kind of for the first time, Choice is aggressively attacking those areas with our extended stay segment.
Okay. Does anybody else want to jump in?
I just going to parrot some of that. We're looking mainly in the Southeast. We are looking in some other markets. We're based in Georgia. The Atlanta market's been very strong, but it's very challenging to get an extended stay approved there. There's barriers to entry. I would think that it's more of a pro-development state, but it is a challenge with some of the entitlements and some of the perception with some of the local municipalities of what an extended stay product is. As we're talking about economy extended stay, when we're mentioning, say, a Woodspring Suites brand, Everhome is in the mid-scale range, but many of the cities get confused with some of the unbranded older product that is really not all like what we're building. So you need to get through some of that, even in places like Georgia.
Okay.
That's interesting because here in Southern California, it's less so much the resistance to extended stay is just the process and the expense of the process. They like the transient occupancy tax in general, but from pre-approval to approval is quite a lengthy procedure here.
So is the strong performance, is it attracting new entrants to the sector? Are you finding what other maybe owners saying, let's get into the extended stay offering, or even from other brands? Are they kind of now deciding, let's add this now to our offering?
Yeah. Again, if you don't mind, I try not to make this an infomercial on Choice, but that's what I know. That's my area of expertise right here, right? So at Choice, yes. I mean, we continue to see new people coming into the business, whether they're hoteliers or non-hotel, private equity, family office, multifamily development, commercial space. That's always been our bread and butter at Woodspring. But we're now seeing for the first time some of our key clients in our existing portfolio and others at one of the larger competitors. We're now seeing them come in and look at extended stay. Again, it's all about the return on investment. And when you can see a return on investments over 10% pretty consistently, that's areas where we can get anybody looking at what we're doing. So in general, and those that have been around a long time in the extended stay segment would say we don't have a lot of hotel people, if you will, that are operating these things. But I guess when you have 30 or 40, you're a hotel person, whether you think you are or not, right? We remind them that. But it is a real estate play, and I think maybe, Chip, you're probably good at answering that question for us too, from your perspective.
Sure, and it's actually extended stays are not the only product line we have. We have some other real estate types that we look at. But one of the things we look at across all of our investments, we try and go initially where the capital is not. So we end up going into RV parks are an area where we're in right now, which is just starting to attract institutional capital. Extended stay, it's been the same way. It's probably a little bit ahead of the parks. And we look at it. I started my career actually in multifamily acquisition, Class A, garden style, actually out in California area for a large REIT. And at that time, when I was in the 90s working in multifamily, I felt like a second-class citizen. Everybody looked down on the multifamily guys, saying you're not real commercial real estate guys. Well, we all know what happened with multifamily. Became the darling of Wall Street. Cap rates compressed to to levels where they're just it's just amazing what's happened with them. And storage has been the same way. And I see that happening with extended stay hotels as new capital comes in. You see the durability of income that we've had over the pandemic, and makes some people look at it a little bit more than they would have previously when they thought they lumped it in with the rest of hospitality, because it is a slightly different animal. So we're going to see more institutional capital coming in. I'm getting more calls. And I think we all agree that that's going to lead to cap rate compression throughout the space, and just more liquidity for sellers as well.
Okay, we touched a little bit upon development pipeline. What does it look like going forward, and what about the rest of 2021? How's everything looking?
You want me to answer that? I can answer just from the overall national perspective, and I think, Philip, you could talk about your pipeline and Chip, what you got going, and Jerry, what you're managing. We have a lot of going on right now. We have over 50 deals in the pipeline, if you will, the extended stay pipeline, and out of those, I would say 100 are very active, either going to break ground or expected to break ground in the near future. So we don't see any weakening in the interest, if you will, or in the contracted interest. What we are seeing a little ground breaks have dropped off a little bit with construction costs kind of fluctuating so much over the last 6 months. We're seeing a little bit of slower pull the trigger, get the shovel on the ground, but I don't see deals dropping out. I just see them being postponed somewhat. So we think it's going to be a heck of a next couple of years for us as we see these markets really explode and open up with extended stay.
Okay. Jerry, do you want to jump in?
Yeah, so for us, revenue numbers over 2019, definitely we're experiencing much of the same. We've got a couple of locations in primarily government markets, so that's been a little challenging. As government travel's still restricted, but it's picking up. And then we have a couple of hotels, the oil and gas markets in the oil and gas industry. Of course, that's cyclical. That started happening prior to COVID, but we're starting to see some uptick there. Development pipeline, we've got 6 projects in our pipeline from an extended stay standpoint, 2 Everhomes and some other projects. Our niche is the extended stay market. That's all we've done for the last 16 years. And I agree so far with what everybody has said about the resiliency of the extended stay market.
Okay, great. Anybody else?
I can comment a bit, I think, on the rest of the year and beyond. I mean, the rest of the year for extended stay, it's less susceptible to seasonal variations than the overall hotel industry. So the hotel industry caught up a lot during the summer travel season. I think that the gap between extended stay occupancy and the overall hotel industry started to narrow back to about its long-term average, although it's important to note that for the last 18 months, it's been way higher than its long-term average. I think that gap will widen again by the end of the year because it's pretty clear that the group business is unlikely to come back the way that was initially anticipated. It's questionable about business travel, particularly at lower price points. The extended stay segment is less susceptible to changes in those areas. So I think that the last 6 months, the relative performance is going to be even better than it was in the first 6. And just in absolute terms, it's been very good as well. The construction pipeline has declined maybe 15% year over year, which is normal during a correction. I think that will probably continue to decline a bit before it picks back up. And then if you look at the forecasts, for the next 5 years, I think on average extended stay supply over 5 years is probably 5 to 6% annual increase, which is a bit lower than the last 5 years, but it's still 4 times what you would expect for the overall hotel industry in terms of future looking room growth.
Yeah. And one thing we didn't really get into, Christina, much is that, we have other brands at Choice, but there's other segments to talk about, and that's the conversion activity. And what we're doing with our dual branding. But Mainstay specifically is up 29% at Choice within our portfolio. We've grown 29% over the last year and 15% with Suburban. So not only are we building new hotels, but those, and then not just with us, but with other companies, the conversion pipeline is growing finally, because again, people are saying, you know what, do I want to get out of transient? Do I want to look at maybe getting into a Suburban type economy hotel, economy extended stay hotel that's going to have less fluctuation in rate and occupancy. So we're seeing a really good movement in that area. That is something that these guys here actually haven't invested heavily in, other than, I think, Jerry, you do have some Suburbans, Suburban brands. But yeah, so there's so many different ways to skin the cat here with extended stay, and we're playing with all the segments right now.
So you just mentioned actually dual brands, and I see actually in the chat, someone wanted to know a little bit more about the dual brands hotel market. Any comments on that from anyone? And Mark, do you have information that you could share on that?
I don't have any statistics to show performance of dual brands versus other hotels that are comparable. We've seen increased interest, particularly with dual branding and extended stay and a limited service or select service hotel. Yes, there's some potential economies of scale, both operationally and during the construction. So I think that that's an emerging trend which is going to gain traction.
Okay.
And from Choice's standpoint, yeah, I mean, Sleep Mainstay is a very strong brand for us. It's a great dual brand for us, and we're going to continue to do that. There's 2 ways to look at that. I would look at that as more incremental growth in areas where the demand isn't super strong for extended stay. If it is, you want to stay extended stay. It's just much an easier model. And again, I think we'll get into that here in a minute. But it's just so easy to manage something that is extended stay. When you get into the dual brand, you're doing it because you need to capture that transient business that's obvious there, and maybe not enough extended stay. So it makes some sense to do it. And Choice has pretty much honed a methodology to get there. But we strongly recommend doing a full extended stay building in areas that have high demand for extended stay. Again, ease of operation.
Okay.
And profitability.
So construction, we've mentioned that a few times now, but inflation is certainly an issue with costs of lumber and steel and concrete and FF&E all skyrocketing. So how are you addressing this, and are construction costs hampering new development in any way?
I can address that from our perspective. We priced our Corona project summer 2020, and at that time, there was quite a lot of competition at the GC level. So we were able to get very good pricing. Then a year later, almost a year later, when we were able to get financing, we repriced it, and the total hard cost budget was almost 30% higher. And a lot of that was lumber. So we priced it in May of this year, and that was really at the point at which the lumber spot price was at its highest. It was $1,700, 1,000 board feet. So what we did was we held off on the framing contract, and we only just signed it last week, and we saved a very considerable amount. So we're quite far back down to where we were. Still, a significant increase over last summer, but what we're learning is, we alluded to earlier, if you're underwriting off 2019 numbers, the 2021 numbers are very strong. And so that definitely offsets that price increase from, an overall deal point of view.
Okay.
Yeah, I agree with that. And we certainly shelved some projects, not only in this space, but other areas as well because of pricing. We were talking to contractors and subs, and we were getting feedback that bids would only be good for 2 weeks.
Yeah.
Even less on lumber. So it was challenging to try and get projects going, and it's the same experience that Phil had with some pretty large increases. But we have seen things come back quite a bit lately, and also just where the performance is. Maybe the costs haven't come back completely, but we're seeing higher rates, enhanced revenue that is making some of that up. Of course, then the land sellers like to say they need to get a part of that too, which is you can't make everybody happy on that. But I think we've picked up a lot of it in rate as well.
Okay.
And Chip, do you have maybe from the recent bids you're getting? Do you have any numbers like? It's coming down a bit, but where did it peak out for you as far as increase, and where are you now compared to what you were in 19 when we were looking at projects?
So I'd say we're probably I can't give an exact number where we are today because we're just going back out with a project right now. But from where the peak was, the project was up 25% from when we first bid, and we're hoping. Hoping that's come back down, and from all indications from our GCs is that it is there.
Yep. Good.
Yeah, I will just speak here quickly. My forte is not construction. We're on the operations side, but I can tell you our last project, brand new mainstay suites that opened in Pennsylvania, was delayed over a month because of supply chain issues. Painful, but the hotel is killer. It's performing really well, but something that we had not experienced prior to the pandemic, and mainly FF&E.
That's a very good point. And we just opened Woodspring Suites in the Atlanta market in March. And Choice was great in working with us because we actually opened when we didn't have all of our rooms available because of supply chain issues. We couldn't get the refrigerators that we needed, and one day 3 would show up, then 10 would show up the next day. It was a challenge.
And that continues to be. That's one of the things that Choice has tried to hedge our bets, if you will, by especially for our Woodspring and our Everhome brands, where we did have a single supplier for most of those products, except for what you just mentioned, the appliances, where we kind of warehouse some of that stuff in advance. So we kind of know when, on-time delivery at the property. So we've been really good with the major things like FF&E and the case goods and what we're doing in the kitchens. Appliances are something that's kind of out of our control somewhat. But yeah, that is something that is going to continue to be an issue over the next several months until we can get some of the labor issues taken care of and get the supply back. A lot of that's still coming from China, although we try to source as much here as we can.
So during the pandemic, the average length of stay increased across virtually all markets. Do you expect that to remain and to become the new benchmark, or will it level out to some degree, do you think?
I think I looked at Calibri Labs' most recent report today. They just issued one, Mind the Gap.
Yes.
And they said it was a 1 to 2 night gain in average length of stay versus 2021, 2019. And the gain was larger at lower price segments. One of the reasons for that, I think, is the increase in essentially residential demand that got displaced into lower price extended stay hotels for a number of reasons. That could be multi-generational families faced with a pandemic said, for safety, we have to do something. And we've seen in many of the markets that we've been, both in an extended stay and especially older economy hotels, the amount of 30-night plus business has gone up quite a lot, which of course would increase average length of stay. I mean, that has happened. I don't think that that's going to last forever. I think, when the housing crisis, it's not going to be national forever, I don't think, and that's going to push some of that down. So I think it's temporary, and it'll take a few years to come back down to about where it was historically.
Okay.
Yeah, and specifically at WoodSpring, we have multiple brands, but at WoodSpring, it actually was, the length of stay was higher. It did drop just a little bit, but some of that was strategically, we were pushing rate where we could, when we were okay with a little bit less occupancy for a while as we kind of stabilized where we wanted this new construction economy brand to sit. But we are right now seeing longer length of stays than we've had in a few years. And so, we expect that to kind of continue. You're right, Mark. There's some reasons why, people are staying with us a little longer, but obviously that's what we want, as a brand and in the segment, we all want long-term stays because that's what's most profitable when you're not in that room cleaning it every day. So we're doing everything we can with our technology, and we've been investing for years, but especially over the last couple of years, investing in technology that allows people to book and stay longer and make it an ease of transaction. So that's a big focus on what we're doing.
Jerry, are you seeing that too?
I was going to, traditionally for us, with our extended stay brands, we were probably 80% long-term, meaning 7 days or longer, 20% the traditional guests, 1 to 4, depending on the brand. During COVID, when COVID hit, that changed dramatically. And a real benefit, another reason why, many times that we get called when we have somebody who owns an extended stay hotel and they're trying to run it as a traditional hotel, it's impossible. You don't have the staff, the ability to deal with that. But we experienced a lot of transient business in the first couple of months of COVID. We're probably back where we were, but the makeup of our guests has definitely changed. Our wheelhouse was always construction, training, corporate training, government business, military business, etc. Right? It's getting better, but we have found ourselves doing things that I never thought, when I first entered the hotel business that I would be doing, 33 years ago, dealing with, you talked about temporary housing and the housing crisis in the US. I can sit here and I can tell you, as small as my company is, it's a real deal. It's a real problem. And for us to become educated to help these individuals find funds necessary to allow them to stay in hotels or to stay in our hotel, which is a key point. We're a hotel. We're not an apartment. And we've experienced eviction Nothing we've never done. Nothing ever, anytime. Somebody cannot pay, having to go through that process, learning that process, it's been very challenging for a small company. We're essential to the world that we live in. We're essential workers, but we're treated as second class, meaning that there's so many people ahead of us that we're able to get vaccinated, but yet our people, our team are on the front line dealing with people day to day, right? But with that, there's not only a housing crisis, but domestic violence shelters where during COVID, there's no other place to go, or rehab centers or housing of that nature, right? And we're essential, and it's kind of a calling, right? It's a biblical standpoint, no room at the inn, right? We're here to help people, but it's definitely been an education and learning things that we never thought we would have to learn to help these people and their people.
It seems like COVID's obviously it's opened up some new challenges that you had to face, but at the same time maybe opened up some new sources of revenue as well.
Right, and welcomes, right? When you have the rug pulled out from under you, mm-hmm. Complete shutdown, yeah, for sure. And welcome that revenue, welcome the ability to help these people, and it's going back to more of the normal operation, but yeah, it's definitely been challenging for sure.
And nearly all of them. One good thing about a positive bright note there is the 460 hotels or so that we have online, almost every one of those provided a niche for that. They provided some shelter and sometimes when we really needed it. So it's a good business to be in because it feels right when you can do something like that.
Without a doubt. I want to circle back to labor shortage. It's a major issue up right now. I don't need to tell you that. So does the extended stay model give owners flexibility in terms of number of employees needed to operate the property? Maybe talk a little bit about the operating model for viewers who are considering adding extended stay to their portfolio and how labor shortage and that are connected.
Yep. Well, it's what gets back to what Ron was saying earlier about length of stay, right? Especially today when, we've seen the cost for a housekeeper go from $10 to $11 an hour to $13 to $17 an hour. The longer the stay, the better the result.
Yeah, and I mean, with the extended stay, we've been talking about it a long time. I don't think anybody on this call here would be doing what we're doing without a labor model like it is. That's one of our biggest secret sauces that we're, I guess, letting out of the bag right now. And every other article you see is the low amount of labor it costs to run an extended stay hotel. So at our Woodspring, for example, we're looking at somewhere around 6 full-time equivalent employees to operate one of those. The boxes in our Everhome, which you see over here on my shoulder, it's showing up very well. That's about 11, and it's a little bit more. That's a 24-hour operation. Our Woodspring brand, does not have to operate 24 hours, so there's some savings there too. But yeah, we're all about keeping the labor at a minimum, and again, giving them exactly what they need, but not more than what they need. And if you think about it, if this is their home away from home, they check in, they don't need all the services that you have to offer in a transient hotel. So, I mean, they check in and they hopefully come down every once in a while and talk to you and see you if they need a towel here or there, but it's really self-sufficient model. And that's kind of why we all love it so much.
Great. So for us, our typical extended stay hotel, we have probably at most 12 team members. I have, through the years, many friends that are not in extended stay and hearing about shutting down wings of hotel buildings, and they have the demand, but they're not able to service demand because of staffing needs. We've always been a believer in extended stay and have loved the concept that we have fewer team members than a traditional hotel, but it's definitely very challenging for everybody out there. We have doubled down on our team during COVID, making sure, number one, that our team is safe, that we have technology available for them to be able to communicate with us, guests, etc., so that we can maintain safe distances, social distancing. And we've really made, their safety was always a priority, but I mean, we have just absolutely doubled down on that because you cannot, I don't care how big your hotel is, how many employees you have, if you do, or team members, I hate the word employee, but team members that you have, if you don't have team members, you can't run your hotel, right? It's just as simple as that. The other side of it, from a business side of it, we have hotels and markets with businesses that are experiencing the same thing. And they're shipping people in from all over the country to help do distribution work, et cetera, et cetera. They need a place to stay.
Right.
So it's kind of, it's double-edged, right? It's great from a business standpoint, but from a team member standpoint, I mean, our number one priority is to keep them safe. We have mandatory vaccination policy in place just from the mere fact it's the right thing to do. We want our team, our people to be safe. And then also from a business standpoint, we're not set up to deal with, COVID, quarantining and all that. You got one person out who's going to cover it, in a very small team. So we've taken an aggressive standpoint, but for the most part, we're fully staffed, but and we're 99% vaccinated. So I can sleep easy at night knowing that our team members are at least safe as well as we know science tells us at this point.
Just to add to that, we've experienced some of the same issues. We are not a property manager in this space, however, so we contract that out to people that we feel are the real experts. So I'm not dealing day to day with some of the staffing issues like our property management company is, but we've had higher turnover than we would have liked, and some of that's just there's other options for people. You read in the paper every day what another company is offering to attract employees, but we've also benefited, as Jerry mentioned. This, for instance, our Newnan, Georgia property. Newnan is a logistics hub. There's distribution hubs, fulfillment centers in the area. Amazon has a large facility. PetSmart has one of their largest distribution centers for the Southeast there. I would say that we make up probably more than half of our room nights through staffing companies, logistics companies that are staffing those facilities, and they don't have the local employment base to, as they keep popping up. So they're bringing them in from outside of the area, and we're benefiting from that because they're staying with us.
Great. We don't have a lot of time left, and I see a question coming in from the audience, so I just want to make sure we get to it. Are you aware of any projects that might have switched to extended stay from other categories because of extended stays success during the pandemic? Does anybody want to take that one?
Well, I guess I'm probably the best person to look at that, but yes. The quick answer is yes. We're seeing people that we're going to build a transient hotel, or maybe even more of an upscale extended stay at this point, and then they're thinking, you know what, Choice just launched this Everhome project, or we like the Woodspring, or we think we can convert one. But on new construction, yeah, we absolutely have seen plans change midstream from another brand and brand segment into our segment. I'd like to see that more often, of course, for self-serving reasons, but it only makes some sense in this environment where there's the demand. And I saw another question that kind of ties into this, is there an oversupply opportunity there? Then are we getting too much conversion into it? And I think, a brand a company that really looks at diversifying and has different brand segments can do the right thing. Hopefully you're not piling on top of each other the same type property. And so I think we spend a lot of time to make sure it's the right demand generators for that exact product. And there's a lot of room for growth right now. And so I don't know if we have a good number right now, Mark, to share if you have a recent number, but demand is still much higher than supply, and I don't see that change anytime soon. So I think there's room for some of that transient stuff to move over when it should.
Mark, do you have?
Yeah, I mean, the demand for extended stay product exceeds the supply, yes. I mean, as I mentioned earlier, unless I've got co-mingled between the two webinars today, but the amount of extended stay business in traditional hotels in the US in absolute terms is bigger than it is in extended stay hotels. The percentage is much lower, but there are 10 times as many rooms. So the absolute number there, and if you go back, in the earlier days of extended stay, that business, particularly at the lower price points, because there was very little economy extended stay product at that time, was housed mainly in traditional hotels. And when these brands grew, they were pulling the business out of these hotels. In many cases, I don't think the hotels actually knew how much extended stay demand they had in there, because they don't think that way. They don't think in terms of, okay, this is one guest, but he's staying 30 nights. That's 30 nights. They look at it in terms of individual guests. So I think that was a big surprise. One of the biggest surprises when, that data was issued, which was for 2019, we did it with Calibri Labs, was the actual number. That even after 20 years of development, there is still more extended stay demand defined as 7 consecutive nights or longer housed in traditional hotels than in extended stay hotels. So, there's plenty of opportunity there. And to go back, we have seen perhaps, a client that had already got a site for limited service hotel in a market. They put it on hold during 2020. That happened many. They then came back and said to us, we'd originally thought this, but should we be looking at extended stay now? Could you run the analysis assuming we're doing a traditional hotel and assuming we did this type of extended stay? Yes, we're seeing it.
Okay.
And Mark, I'm sorry, who was that asked you that question? Share that with us if you're in UK.
Later on, when the pub opens.
There you go. Hey, one of the things that you just mentioned, a micro fridge only goes so far, right? So, like that's what they're using now. They're just staying, trying to make a transient room work. Eventually, you're gonna need that bigger fridge and that cooktop and other items.
Right.
So there's only 5 minutes left, believe it or not. So in those last 5 minutes, I like to wrap up with a kind of a summary. It certainly sounds that, extended stay can extend your profits. And so what's your message to those viewing today who are considering either augmenting their portfolio with extended stay or adding their first one? What's the message you want to leave everyone with today? And I'm actually going to start with Chip. I'm going to start with you.
Sure. When looking at extended stay, I would say a couple things. Understand your partners. If you're not using if you don't have a discretionary fund or using your own capital, make sure that you're aligned with what you're trying to do. That's always very important. Also, pick a good team. And when I say pick a good team, they say we're not property managers in the space. We aligned with group that we believe is best in class, and there are a number of good ones out there. And also with your contractor, make sure you go with a general contractor that is familiar with the space, architects, so the team align with all the groups that have experienced this, because it's really, in the end, there's a prototype that's a box that is pretty similar, whether it's built in Texas or Florida or Georgia, but it's really easy to mess that up if you don't use groups that have been there before. So use a tried and true team. And then I'd say, know the city as well. We talked about before, perception of what an extended stay is. We've experienced that a bit in Georgia. Doesn't seem like it's as much of a problem in other places, and the entitlement process. So that's a lot, but it's not as complicated as it sounds if you stick what's been proven before. For instance, with the Woodspring or Everhome type brand with choice.
Okay, Philip.
Yeah, so we think the opportunity for extended stay is huge, particularly here in Southern California. That said, there are some real barriers to entry. Number one, finding the right site. Building a project in the wrong site, particularly for extended stay, I think is just really the worst thing you can do. But finding the right site, which is near the on or off ramp and near a major freeway, is hard. There are opportunities out there, but they're few and far between. You need to also be well aware of the climate in the particular city that you're dealing with. I mentioned earlier, most cities are fairly well inclined towards extended stay because of the TOTs, but you need to know what the story is from the point of view of how much time it's going to take. It's going to take time. The other thing that we didn't really touch on at all is financing. And during the pandemic, hotel construction loans were probably the bottom of the rung of, maybe even below the bottom of what lenders wanted to do. I think that's starting to loosen up quite a bit, but that's something that obviously you need a construction loan. So before you get into it, make sure you're going to be able to get one.
Good advice. Jerry.
Yeah, thanks. I agree with everything that was said thus far, but I would add, if you're new to extended stay, you don't have the expertise. That's what we do. We don't necessarily develop the hotel. We work with the developer to manage the hotel. Long track record. It's not a PR segment for me, but the key is to own your backyard. Sales with an extended stay property. Just because you turn on a reservation system doesn't mean you're going to get the extended stay business. So you have to have some expertise in that. That's something that we've done for the last 16 years. I mentioned earlier, we opened up a hotel in July. It's already ramped up. It's doing really well. So it's what we do. We cannot create a market, but we can own a market, and we can help with that. So it's a great industry to be in, especially this segment.
Okay, good. Mark?
My advice to somebody who's looking to get in, maybe you're an existing hotelier, you just don't have any extended stay hotels, or you're just new to the segment. You need to remember two big things. One is that you are a price buy compared to traditional hotels of a comparable class. Extended stay hotels work by taking care of their core business, which is generally a longer term guest. Obviously, at the lower end, that length of stay is much lower. They get a discounted rate. You build in your layer of business. So even at the luxury end, they layer in a lower base of business than economy, but they still do it to get that base of business, and you are a price buy in all segments. That also said, stick to your model. Stick to it. Don't chase the rate. Just because the Super Bowl's in town, don't hold all your rooms waiting for it, and you won't get a group of 20 people staying for 2 weeks because you're going for the big ADR on one night. It's a common error for hoteliers who are not familiar with the segment and don't hire a management company who knows how to run them. See it quite often. And then eventually they get the message because their occupancy is not high enough. And, they ask why. And that's the reason why in many cases.
Okay. And Ron, I'm going to let you have the final word on the topic.
Okay. I know we're a little over time here, and I apologize, but there's not a single thing there that I didn't hear that I, just enhance in any way. These guys are doing it. Find the right location. This isn't build and they will come. This is not like you can do in a transient hotel sometimes. This is build in the right location and work with a hotel company that absolutely knows markets and can give you data on why you should build here. Not just, we like this site and you own this site, let's build it. That absolutely doesn't work. And I can tell you multiple examples when it didn't go right is when we were forced into a site or somebody had a site that they shouldn't have built on. So, Choice has proprietary tools to make sure that, we have some guardrails or at least some advice to guardrails. And so we focus on that. And above everything else, make sure you get a management company in there that understands extended stay. Don't think because you have 100 hotels and you're managing, Hamptons and Comforts and full service Holiday Inns that you know how to run an extended stay. It is completely different. It's boots on the ground, as what Jerry said. And if you're a builder like Chip, do not go out and try to manage this hotel yourself. Focus on what you're really good at. Build the next hotel and let the experts do it because they're out there.
Okay. Well, it is time to wrap up. So I just wanted to thank the viewers for watching, and I wanted to thank each of the panelists for spending your valuable time with us and sharing your insights. And a big thank you to Choice Hotels, our partner, for this informative session. So I appreciate it. Thank you all.